it has been a tough year, I think, for a lot of manufacturers. I want to show what's behind that, and I want to demonstrate as well, it's not just been true of the UK. I think a lot of the pressures that manufacturing has been facing are global pressures, though in the case of the UK, it's been exacerbated by certain domestic pressures generated in part by a strong currency, particularly against the euro. So I'm going to talk about that first of all, and then I want to talk a bit about the medium-term environment as well, and what's been happening to manufacturing over the longer term. In particular, I want to talk a bit about what's been happening to manufacturing productivity, reasons why manufacturing productivity has underperformed in the UK compared with its peers, and what we can do about that. So anyway, let's kick off and look at the economic environment. And first of all, just to show that it's been a sort of uncertain year so far, I just wanted to demonstrate the volatility in financial markets. Now, you might, like me, may feel that financial markets aren't necessarily a good indicator of what's been going on in the real world or what goes on in the real world in general. I'd have a certain amount of sympathy for that. And certainly for this year, markets have been telling us seemingly all sorts of things. Initially, at the start of the year, we got a huge fall in equity markets, which seemed to be in particular associated with concerns about the Chinese economy, and seemed to be sort of flagging, real fears that the world economy may go into recession. Now, more lately, you've seen quite a big rebound in stock markets. A lot of stock markets are now above their levels at the start of the year, and so seemingly indicating that economic conditions were not quite as bad as people thought a month or so ago. Now, what's actually been going on in the real economy itself? First of all, I just want to talk about what's been going on in economies in general, and then I want to talk more specifically about what's been going on in the UK and what's been going on about UK manufacturing. What I've done here is just highlight, what's been happening to global growth and growth in some of the main economies. This has proved to be a more difficult year so far, I think, for the global economy than we expected, and I think most economists, most forecasters expected at the start of the year. Certainly at the start of the year, what most people thought was that world growth this year would be stronger than last year. Now, that doesn't look like it's going to be the case. What you've seen is people revising down their forecast for growth. In particular, this week, you saw the IMF revise down its forecast for global growth, both in the developed world and the developing world. And so now most people are saying that what at best will happen is that global growth this year will be around about the same as next year, though they do hold out hopes that things will pick up through the year and next year will be somewhat better. A lot of the downward revisions do seem to be due to what's been happening in emerging markets, rather than what's been happening in the developed world. There have been certainly some concerns about the outlook in the US and in Europe, but a lot of the downward revisions have been about China and knock-on effects from China to the rest of the world. And I think that is one key theme that I want to talk about when we talk about manufacturing, because the impact of China just in general, has been a huge impact on global manufacturing of late. Before I do that, I wanted to talk more specifically about what's been happening to the UK economy in general. What this slide does is show what's happened to UK growth over the last few years. And there's some positive and negative stories to this in terms of looking at the UK as a whole. The bars essentially show quarterly GDP growth. The line shows year-on-year growth. Now you can see that the bars in general over the last few years have all been heading upwards. So in 2013, 2014 and 2015, we've seen reasonably consistent growth in the economy. In most cases, above trend growth in the economy. So, the economy has been growing, has been growing at a reasonable pace over the last few years. However, you do see there that the line sort of peaked out somewhere in 2014 and has been moving down of late. So basically, growth has been slowing somewhat in the UK. Still for the UK economy as a whole, it's grown at a reasonable clip. The latest estimate suggests that it grew at 0.6% in the fourth quarter of last year. Seems like it's going to be a bit slower than that in the first quarter of this year. But, overall growth in the economy this year is probably going to be around about 2%, which is not a lot slower than last year. And we expect something similar for next year as well. So the overall economy could be doing better, but, it's not doing that badly. But within that, manufacturing's not been doing very well. And to demonstrate that, what I've done here is sort of split out the sort of main components of economic growth and show what's been happening to the economy as a whole, and then to the various bits of the economy, services, construction and manufacturing over the last few years. The most obvious thing there is that services continue to drive the economy. Service sector growth has been pretty strong over the last few years, much stronger than the economy as a whole. Growth has been very much about the service sector. In contrast, you can say that blue line there is what's been happening in manufacturing. Manufacturing activity fell very sharply during the recession. There was, in the initial stages of the recovery, 2010, 2011, a reasonable sized bounce in manufacturing. But certainly since then, it's sort of flattened out. And certainly over the last 12 months, we haven't seen any real growth in manufacturing activity at all. And the only indications are for the first half of this year that manufacturing activity has been very subdued again. So manufacturing's definitely been underperforming. Now, there's quite a lot of variation there within manufacturing, which I will come to in a moment. But overall, the picture is manufacturing not doing very well. Now, the UK is not alone in that. And what I've done here is, this is admittedly a very busy graph. But what I've tried to do here is show, what's been happening to manufacturing in various other parts of the world as well. So I've included here numbers for the US, for Japan, and for various bits of the euro area, France, Germany, and Italy. In a nutshell, the UK has underperformed, say, some parts of the world, including the US and Germany, but it's not been doing extraordinarily badly compared with the rest of the world. In general, certainly over the last 12 months, what we've seen is little growth in manufacturing just about anywhere. And that's not only true of the developed world, even in emerging markets, we've seen a big slowdown in manufacturing. In particular, one of the key issues right now is the slowdown in the manufacturing sector in China. So this may not be a lot of consolation, but the UK economy, is not alone in having issues with manufacturing right now. Now, what's been driving the issues for manufacturing, or more specifically for the UK? Now, certainly in terms of the UK, I think what's worth emphasising is that the recovery has been very focused on consumer spending and domestic demand in general, which is a help for some parts of manufacturing, but it's not necessarily growth in the right areas that are the key drivers for manufacturing. What was certainly hoped at the start of this recovery, that we'd see some rebalancing of economic growth, that growth would be less than in the past about consumer spending, more about exports and, say, investment. Now, we've not really seen that at all. There's been some recovery in investment spending over the last 12 months or so, but in general, the recovery has been very much about consumer spending. And in particular, what we've seen is exports not doing very well at all. And that's certainly an issue for manufacturers who depend so much on exports. So, that's one of the key reasons why UK, manufacturing has been doing so badly. Now, I wanted to focus on a number of reasons why export growth has been so subdued. One of the first things I wanted to highlight is what's been happening to the oil price. Most of you will be aware that there's been a simply phenomenal fall in the oil price over the last few years. Back in the middle of the 2014, the oil price was worth around about $100 a barrel. that basically in order to buy a barrel of crude oil, you were having to spend about $100. Right now, you're having to spend around about $40. So it's been an absolutely tremendous fall in oil prices. Now, when this first happened, I think us and most people thought that this was positive news for most of the global economy. Obviously, bad news if you're an oil producer, bad news if you probably sell oil producers, but in general, good news for the global economy, certainly for anybody who's an oil consumer. And I think by and large, that is still the case. If you look at what's happened in the UK in particular, one of the key reasons that consumer spending has been so strong is that the lower oil price has acted like a tax cut. People are spending less for their petrol, less for energy in general, and as a result, they have more money to spend on other things. So I think it's one of the key reasons why the economy consumer spending is doing well. But the impact on manufacturing does seem to be more mixed. Certainly, it has meant lower costs for manufacturing on the energy side, though in the case of the UK, that's somewhat swamped by other regulatory things and tax rises. But in general, what it's also meant is that there's been less investment demand by the oil sector and by anybody that sells to the oil sector. So the initial impact on manufacturing seems to have been fairly negative because you've seen sort of big fall in capital spending in certain areas that has not been sort of replaced by increased demand from other areas. Now, we do think that this will eventually wash out and that you will see some more positive signs from this lower oil price. But certainly the immediate effect of the lower oil price has possibly been a bit less positive for the manufacturing sector than we thought. Now, the second thing I wanted to highlight, which is a more specific UK factor, and I thought lies behind the problems the UK's manufacturing sector has had of late, is what's been happening to the exchange rate. Basically, over the last year or so, what we've seen is the UK sterling sort of caught between two powerful international trends in currency market. Strength in the dollar and weakness in the euro. So basically, sterling has gone from around about 170 in the middle of 2014 to its current levels, which is somewhere around about 140. In the meantime, for most of the recent period, sterling's been going up strongly against the euro. So, went back in the middle of 2014, it was around about 120 against the euro. At its peak, it was over 140 against the euro. More latterly, it's come off. But for most of the story of the last few years has been strength against the euro. Now, basically, in some ways, this has not been good news for manufacturing. Because on the one hand, they tend to buy a lot of their raw materials in dollars. So the strength of the dollar has meant that, input costs have been quite strong. On the other hand, a lot of their major, the EU is their single major market. So they've faced a real competitiveness issue in Europe. And so, the movements in the currency market, has not done the UK manufacturing any favours. And I think one indication of that is what's been happening to the British steel industry. The decline of the British steel industry represents a number of factors, but clearly we've had a major negative competitiveness shock, say, compared with European steel producers in the Netherlands or in Germany because of the strength of sterling. Now, one of the positive factors recently is, at least for manufacturing, is that we've started to see quite a big slide in sterling. I mentioned that a few years ago, sterling was around about 120 against the euro. It's back close to that again now as well. So, I would expect to see some of the competitiveness issues that UK manufacturing has seen over the last few years start to go away, providing the exchange rate remains around about current levels going forward. Now, the other thing that I wanted to highlight about the international situation is what's been happening in China, because in China is increasingly important for the global economy as a whole, and certainly from the manufacturing side, China is very important. China is now one of the world's biggest manufacturers. I'll show a chart in a minute that will show the long-term development of China, certainly compared to ourselves. It's also one of the biggest demanders of manufactured goods and commodity goods as well. Now, what we've seen in China over the last few years is a slowing of the overall economy. We're also seeing a restructuring of the economy going underway. The Chinese growth story, which up to now has been very much about manufacturing and construction to actually help manufacturing, is now becoming more diverse. There's now more emphasis on domestic demand, less emphasis on exports, more emphasis on consumer spending and less on exports. Now, eventually, I think this will be very good for the UK economy. They'll be buying more of the stuff that we produce. But I think in the short term, it's leading to lots of uncertainties in the global economy, and it's not having a knock-on effect to global demand. And the final thing I wanted to point to, that's been having a negative impact on manufacturing as a whole, is the sluggishness of world trade. What I've done here is shown what's happening to world trade growth. What the line shows is year-on-year growth in world trade. What has been very surprising in the recovery of the global economy from the recession of 2008-2009 is how sluggish world trade has been. Typically, you expect world trade to be growing more than world output. As over time, the world economy has been becoming increasingly globalized. So increasingly, you find exports everywhere are growing more quickly than domestic consumption. Now, that's not what's been happening in this recovery. What you've seen is that world trade has been quite sluggish compared with world production. And that's been a real problem for manufacturing sectors who tended to benefit from all this globalization and selling to each other. The slowdown in world trade has been particularly marked in slowdown in trade with the emerging world and within the emerging world. I remember doing these sorts of things a few years ago and saying things like, one of the problems for UK manufacturing is that we didn't sell to the right people. We sold too much of our exports to the euro area, which is a sluggish growth area. We didn't sell enough of our exports to the emerging worlds that were growing so strongly. Now, that wouldn't have really helped over the last 12 months because growth in trade with the emerging markets has slowed so much that's been growing no more quickly than the developed world. So what we've seen is a general slowdown in world trade. I think that partly reflects the issues with China, but a big question going forward is, are we going to see this continued sluggishness of world trade, or will things pick up over the next few months, over the next few years again, and we see much more robust world trade again? Now, just before I move on to the longer term issues, I just wanted to sort of take this overall picture of manufacturing and then talk a bit more specifically about what's been happening in various manufacturing sectors. Because while I said that UK manufacturing has struggled over the last few years, that's a bit of a generalization, and some bits of manufacturing have continued to do quite well. And what I've done here is sort of split out various bits of UK manufacturing just to highlight some of the key trends. The area that's been most obviously doing well is the aerospace industry. UK manufacturing in aerospace continues to grow very strongly. Barely turned down during the recession, started to pick up again very quickly into the recovery, and it's been growing very strongly ever since. And certainly if you look at the order books of the world's biggest aerospace producers, Boeing and aerospace, they still look they still look very robust, and that'll have knock-on effects to the rest of the aerospace industry, including ourselves, who tend to produce parts for these areas. It still appears that there's robust growth in airline traffic globally, so the aerospace industry is definitely an industry that continues to do well. Another success story of the last few years has been the motor vehicle industry. It wasn't that long ago that we saw one of the tragedies of UK manufacturing was the decline of the UK motor vehicles industry. Now, we have seen a renaissance in the motor vehicle industry over the last decade, which says good things about the capability of UK manufacturing, to improve. A lot of these, most of these motor vehicles have non-UK names, but they are produced in the UK, and there's lots of value added in the UK. So that's definitely another success story for UK manufacturing. But there's been other sectors that are doing less well. In particular, two areas I would highlight is, first of all, pharmaceuticals, which has traditionally been a success industry for the UK, but which has certainly struggled over the last few years. I think they're struggling to cope with generic producers elsewhere in the world. And unfortunately, the other area that's clearly been struggling is UK engineering, including your own sector. Now, I think a lot of that reflects weak business investment growth everywhere. The weak world trade that I mentioned has definitely been having a negative impact on this sector, but it's certainly been one of the parts of the world, one of the bits of the UK manufacturing that's been doing less well. If I want to sound positive about the sector, and I would like to sound positive about the sector, I think, there may be better times ahead during the weaker exchange rate, and possibly because of a pickup in world trade, but certainly it has been difficult times. Now, I'd like to now move on and talk a little bit more about the longer term picture for UK manufacturing. Excuse me a minute. Certainly, first of all, what I wanted to do is produce, give a few basic stats for what's been going on in UK manufacturing and the long-term decline of UK manufacturing, and then just talk a bit in conclusion about what we can do about this. Now, the long-term picture for manufacturing is very similar to that sort of short-term picture that I showed earlier. Basically, a relative decline in that manufacturing output growing a lot more slowly than the economy as a whole and the service sector. So basically what I've done here is index the numbers back to the early 1980s and looked at what's been happening in the manufacturing industry since then and compared it with the economy as a whole. Since then, you've seen a tremendous rise in the service sector and fairly strong growth, in the economy as a whole. But manufacturing growth has been pretty minimal over that period. Basically, you can see that, if you index it back to 100 in 1980, the numbers right now is only around about 110. So that basically shows very little long-term growth in the economy. You've had periods of recession when outputs fell very sharply, and periods of growth when growth's not been very strong compared with the economy as a whole. As a result, the share of manufacturing in UK economic growth, the share in GDP, has continued to fall over all that period, and right now it's at a very low level compared with just about anywhere else. And I've thrown in a few comparisons here just to illustrate where UK manufacturing stands compared with other countries. So it's about 10% in the UK. The UK is about, manufacturing is about 10% of GDP. And now, in contrast, the two big exceptions to that are what's been happening in China and what's been happening in Germany. And now in China, manufacturing is somewhat over 30% of the economy. It's around about 35% of the economy, so much higher than in the UK. Now, you might say that China is not a good comparison. An emerging market, so manufacturing, is going to be a lot higher. But of course, the other one that stands out as well is Germany. And manufacturing activity in Germany is over 20%. So as a proportion of the economy, it's more than double in the UK. So it's tremendous differences in terms of the long-term history of UK manufacturing compared with some other countries, and that shows up in our total share of the global manufacturing sector. And one of the long-term stories, I've only taken it back to 1980 here, but if you can take it back a long term further, is the shrinking percentage of UK manufacturing as a share of global production, and the obvious contrast right now is the rise of China as in terms of its percentage of global output. Back in 1980, we produced more stuff than China. In terms of, in fact, our manufacturing industry in 1980 was around almost more than double the size of the Chinese manufacturing. Look where we are today. Basically now, China's manufacturing is somewhere between 25 and 30% of global manufacturing output, whereas we've shrunk to around about 1%. So long-term decline in UK, which in some ways was almost inevitable because we are a fairly small country in terms of the total world population, but the decline of us has been more marked than a lot of other developed economies, at least in terms of manufacturing. The other thing I wanted to highlight in terms of the UK, and I think this has got positive and negative implications, is that UK manufacturing is a lot more diverse than a lot of our competitors. And again, I'd make a contrast here with Germany. If you look at German manufacturing, basically it's dominant in a few areas, and in particular I would highlight 3 areas: chemicals, engineering, and motor vehicles. And if you add those up, those between them come to close to around about 50% of German manufacturing. So it's sort of very dominant in a few areas. Now, that's the negative side of that is that when those industries aren't doing so well, certainly when the global economy is doing so well, German manufacturing struggles. But the positive side is that the sheer weight of those industries means that it has various synergies that run off them. So it has got a very high weight in those industries. Now, if you contrast it with the UK, not only is our manufacturing sector as a whole quite small, but it also is very diverse. We've not really got any one dominant manufacturing sector. The biggest block there is something that I've called other, which is basically all the ones I couldn't put into one single industry. And then within those various blocks, I mentioned aerospace as being, one of our best performing industries, but it's not necessarily a lot bigger, that industry, than loads of other industries. Now, that diverse performance means that, we can sort of do okay in various environments, but we don't really, I think, make the same gains in terms of synergies as German industry does. Now, what I've wanted to finally do is talk a bit about what could be done to improve UK manufacturing performance, particularly what's been happening on the productivity side and the various issues that we've been looking at from this point of view. Part of the reason I'm doing this is that we have been talking to the MTA about this, and we're looking at a project where we've been examining what's been happening to UK productivity, manufacturing productivity, what's been driving it, what's been the problems behind it, and we want to try and highlight areas where things could be improved. And I mention this because what we're anxious to get is feedback from manufacturers and people who are at the sharp end. So if anybody's got anything to feedback on this, if you want to talk to me afterwards, if you want to ask some questions about it, or if you just want to be in contact, we're interested, to hear people's experience with, what's happening with UK manufacturing productivity, what are the positives and negatives. But anyway, what I wanted to do first of all is highlight a few facts and put what's been happening into context. What we've seen since the recession is a general slowing in productivity growth in the UK. The UK's not been alone in this. It's been a global issue, certainly an issue in the developed world, but it's been particularly marked in the UK. What I've done up, first of all, is just put up measures up here of productivity for the economy as a whole. And I've chosen two measures, the amount of output produced per worker and the output produced per hour worked. And they both show a similar picture. What you can see there is the lines that going upwards over time, showing general improvement in productivity over time. But right at the end of the lines, you can see that there's a dip down around about 2008, which is the impact of the recession. And then you can see the sort of, upward trajectory since that dip down has been sort of a lot more moderate than beforehand. So we've seen a big slowdown in productivity growth per year. On average, per year before the recession, you'd expect productivity for the economy as a whole in the UK to grow by about 2%. Since the recession, it's barely managed 1%. So it raises big questions about, is this temporary? Is it permanent? Because if it is permanent, it raises worrying issues about how quickly the economy can grow and how much income growth and how much real wealth the economy can produce. Now let's look at the performance of different sectors within that. I haven't been able to say many good things about manufacturing during this talk, but one good thing I can say is that UK manufacturing productivity has been a lot stronger than other sectors. Hooray. So basically the green line is what's been going to happen in terms of manufacturing productivity. The black line has been what's happening in services. You can see, over a long period of time, manufacturing productivity has grown a lot more quickly than the service sector. Part of the reason for this is the fact that a lot of service sector are very labour dependent. So it's harder to sort of raise the output per worker, whereas in manufacturing, there's been a long-term tendency to replace workers with machines of various types. But the net result of it has been that UK manufacturing productivity relative to other sectors in the UK looks quite good. However, relative to our peers elsewhere, things look less good. What I've done here is take some international numbers that the UK Office for National Statistics produces, showing recent performance in UK manufacturing productivity compared with our peers. Basically, the way they do it is to say the UK number, if productivity in the UK equals 100, if it's indexed to 100, what would productivity be elsewhere? And you can see productivity is a lot higher in Germany, somewhat higher in France, and definitely a lot higher in the US. This is not the economy as a whole. This is just manufacturing. So, UK manufacturing may have done well compared with other sectors in the UK, not done that well compared with the economy as a whole. The only thing one thing I would say that's somewhat more positive is that our underperformance of late has been less than before since the recession. So, while manufacturing productivity may have struggled since the recession, that's been true everywhere. The UK, has not been unique in struggling since then. The other thing that I think is worth pointing out about UK manufacturing productivity is that a lot of the gains we've seen have been about, replacing employment machines rather than finding ways of producing extra output. So we've not really been using productivity to expand the manufacturing sector. We've been using it to stand still. And what I've done here is highlight, the two components of productivity output, the numbers I showed you earlier in terms of what's been happening to output, the sort of, fairly moderate output growth over the longer term, and employment. And basically, this productivity growth in the UK has all been about the collapse of employment in manufacturing. You can see that if you compare with the number of people that are employed in UK manufacturing sector back in 1979, we're now down at less than half of that. So there's been a a huge collapse in manufacturing productivity. Now, a lot of that, I think, was necessary in order for us to cope with the global, in the global workspace. But you can't continue to go on producing your manufacturing gains just that way. You know, some way you're going to have to try and find other ways of improving productivity as well. And I just wanted to close by highlighting, you know, a couple of areas that I think are a key to improving UK manufacturing productivity. As part of our sort of, you know, look into manufacturing productivity, I've been going around talking to various, you know, people have been looking at the manufacturing industry for a long period of time and asking them about, you know, what do you think are the key issues for UK manufacturing and what explains the underperformance of productivity. And there's two things that keep coming up all the time is lack of investment and issues on the skill side. I don't think these are particularly revolutionary conclusions. These are the sort of things that emerge time and time again through these sorts of analysis. But nevertheless, you know, I do think they're important. So I just wanted to conclude by highlighting what's been going on there. What I've done here, first of all, is highlight, you know, the level of business investment in the UK as a percentage of GDP and compared it to our peers. So this is the UK, the green bar is the UK, the various black bars are a number of other economies. UK is lower than anybody else, so we tend to invest less as a percentage of GDP. I just did this for 1 year, last year, but if you do it over a sort of a period of years, you know, the picture, you know, is pretty similar actually. If anything, it's more stark over a longer term that the UK tends to underinvest. China in particular stands out here. It's actually been a particular criticism of China that possibly they've overinvested. But certainly, you know, the UK stands out as investing less than our peers. And just dig in within the numbers, I wanted to look a bit at some areas of spending as well. And so, again, what I've done here is highlight R&D spending, because R&D spending, you know, is going to be particularly important in driving productivity and driving performance over the longer term. And again, R&D spending as a percentage of GDP in the UK is lower than most of our peers. You know, Germany, I think, and Japan in particular stand out here. But the UK, apart from Italy, you know, again on this chart, the UK is lowest. So I think there is a long-term picture of underinvestment in the UK, and one of the big issues is what can we do about that? The other thing I wanted to highlight is skills, because certainly if you talk to companies, you know, time and time again, they say one of the constraints they face in terms of expanding is problems with skills. And what I've done here is take a recent survey done in terms of you know, what companies notice on the employment front. And what's certainly happened over the last few years is there's been a rise in the percentage of companies who see that they've got a problem in recruiting. The problem of them recruiting is vacancies due to skill shortages. They just can't find the workers with the right skills, and as a result, and it's gone up. It's almost doubled between 2011 and 2015. So this seems to be an increasing issue for UK companies, and certainly overall in terms of the number of vacancies they face, skill shortages account for, you know, a large proportion of those vacancies. So companies face issues in terms of skill shortages, and it's not clear that the UK workforce, at least the domestic workforce, is well placed to actually sort of meet this challenge. And what I've done here is highlight just one of the surveys that basically show that UK school leavers and even UK university leavers seem to be underskilled compared with their peers elsewhere. There's been a number of surveys done on this over a long period of time. And what they all tend to show is that UK workers, UK school leavers, tend to have less qualifications than their peers, and in particular have less qualifications in key areas, in particular maths and science. This remains an ongoing issue. Recent OECD PISA survey again highlights this, and in particular it's an issue with us compared with competitors in the Far East. So, you know, skills, I think, remain a major problem for the UK. So just to conclude, I just wanted, before I stop there, just to say briefly what Lloyds thinks is going to happen to interest rates, because we are a bank after all, so I think I should say something briefly on what we think is happening to interest rates. Basically, in the short run, we don't think the interest rate environment is going to change very much. I just wanted to highlight what's happening on the inflation front. You may have seen earlier this week that inflation numbers did move up a bit in March and were a bit higher than expected in the UK, both the headline rate and the core rate of inflation. Now, despite that upward move, inflation remains well below the target that the Bank of England is supposed to hit. They're basically supposed to keep inflation at around about 2% over the long run. Headline rate of inflation is currently around about 0.5%. Core rate, stripping out the effect of the oil price fall, is around about 1 and a bit. So still well below the target. We do expect inflation to move up over time, but we think it's likely to be well into 2017, probably the back end of 2017, before we get back to the inflation target. So we don't think the Bank of England is going to be in any great hurry to raise interest rates. We don't really see them raising interest rates until 2017, to the back end of 2017. So the short-term environment is that interest rates are likely to remain low. One thing that could sabotage that is if sterling continues to decline. If that does happen, we might see inflation rise somewhat more quickly than we expect. But overall, right now, we expect only gradual rises in interest rates over the next few years. So just finally to conclude, what's been happening with the economic environment in general, and in particular manufacturing. I think there's lots of global uncertainty out there in early 2016, but overall, I think we would still, emphasise the fact that the global economy as a whole, and certainly the UK economy, is doing okay. I think some of the gloom has been overdone. I think some of it is connected with the fall in asset markets we saw earlier in the year, and I think with the recent rebound in asset markets, confidence will pick up somewhat. However, I think the gloom regarding manufacturing is more justified, because we've seen generally at best sluggish growth in manufacturing as a whole, including the UK, and the UK has been particularly hard hit by a number of factors, including the strength of sterling against the euro. We think the outlook for manufacturing is likely to improve over the next 12 months as the weakening of the pound starts to have a more positive impact. And we still think there's more to come on the positive side from the lower oil price as well. I wanted to emphasize that UK manufacturing problems are not all short-term, and that with some notable exceptions, again, aerospace I'd point to, it has underperformed over the longer term. And, I wanted to highlight some of the key reasons for this underperformance, including a lack of investment and poor core skills. And finally, I wanted to say that the immediate environment likely to see continued low interest rates. The other thing that I think we're likely to see in the short term is further currency volatility. Now, you may have noticed that during this talk, I haven't mentioned Brexit once. Now, basically, one of the key reasons I've done that is that Lloyds has stated it's not going to take a position on this. It's unwilling to take a position either positively or negatively on this. The other factor is that, we have been told that with the referendum approaching, there'll be increasingly strict guidelines on what anybody's allowed to say about publicly about this. So, we feel it's better not to say too much about Brexit. But I think one of the things that is worth highlighting, I mentioned the weakness of sterling of late. What we've seen this year is a lot of volatility in currency markets, and that shows up in this measure, which is basically how much you've got to pay to hedge your currency in the marketplace. Now you're having to pay more than any other time since the recession in order to guarantee sort of a certain level for a certain certainty for currency. Now, I think a big picture over the next few months is going to be continued currency volatility. And so while we wouldn't want to take a position on the EU thing, one thing we would caution is that, any of you who have got international currency exposure, you should be aware that this is likely to remain a continued very volatile environment for currency markets. But anyway, that's it. That's all I wanted to say about UK manufacturing. We have got a few minutes left, so if there's anybody who's got any questions or anything they would like to say about, UK productivity, I'm happy to answer questions.
I have an interesting presentation, and maybe a slightly conflicting question for you. Do you think it's possible that one of the reasons why investment is so low within manufacturing is it's because it's difficult for companies to get finances from the banks?
We don't, you could say, I'm bound to say this, but we actually don't think that's the main reason, actually. It appears to us that it's basically about a lack of demand, that companies just don't want to invest right now because of various uncertainties. And certainly, I think that explains the shorter term weakness in manufacturing. The longer term environment, I admit, is more debatable, but certainly the shorter term issue is. I don't want to do an advert for Lloyds here, but certainly, Lloyds' position right now is that they're very happy to lend to manufacturing, and that we can't see enough issues out there. But certainly, the main thing we can see in terms of surveys is that, that companies are saying that for various reasons, the outlook looks very uncertain out there, and they just don't want to invest right now. So, we think it's more demand for funds rather than the lack of supply.
Have you looked at the impact of energy and resource prices on productivity at all?
Well, this is, we haven't looked at it in that great a detail right now, but certainly, this is something that comes up. It has been pointed out that, at least since, the early parts of the last decade when, we had various climate change legislation, the cost of energy to industry in this country has been higher, not only than is the case in America and in the Far East, but also higher than lots of other parts of Europe. So, that is a potential negative, and certainly, I think it's been an issue for the steel industry. It obviously is more of an issue for some industries than other industries, because, some industries are more dependent on energy than other industries. And certainly, as far as I can see, there's not a great correlation between, the dependency on engineering and underperformance, at least over the longer term in productivity. So while I do think it's definitely an issue for some industries, and it's hard to see how they're going to cope with this, at least in some cases, but I don't think it is the key reason behind the productivity issue.